I'm going to shoot a quick video on what I call the 1-2 trade method. It's an approach that can be utilized in manual, discretionary, or automated trading. Just something concept I want to make sure you're aware of. And then coming up here by midday, right now it's about 9:42 Central, before noon, I have a super important video I'm going to put up on AI, a training video on kind of AI related references and specifics, stuff that you need to be paying attention to, kind of eye-opening stuff. But let's talk real quick here about what I call the 1-2 method. Let's blow this up here a bit. So when you're trading automated, this is something you can consider, especially if you're doing all day long style of trading where you're, on a signal, you're long, another signal, this is trend bias tool, you're short, then you're long, then you're short, then you're long, then you're short, then you're long, then you're short, then you're long, so it's like a continuous always in trade, at least during the trade hours or the time window that you operate that type of trade. Now, this could also be scalping related if you're just doing quick scalping. But the concept is, and we'll just kind of start right in this area field of screen. If I take a trade on a signal, so there's a triangle signal from the trend bias, and I'm long, and this trade, if it moves to an area where I can at least get my stop to break even or better, that trade is a neutral trade. We're not really considering it then for the 1-2 trade method. So let's say this trade went up and just barely, there was my threshold to go break even plus, and it just missed it by a few points, and then it rolls over. So in this case then, after the long trade right here, there's a short trade. So the 1-2 concept is I'm in long, I don't get to a benchmark level where any stop that I have moves to break even plus, and then I take a loss on the first trade. So I like to trade in units of 3. So I traded 3 units and I took a loss on 3 units. Not a very big loss, but some sort of loss. Not a full stop out, but a partial loss. And now I'm in 3 units. When this trade is running and it gets to the amount of negative P&L that was given up on trade number 1, it'll take out 2 units. So at that moment of time between the 2 trades, I'm flat from a P&L standpoint. I got a third of my trade still on. And then the other third of the trade flips out right in this area price when I get a long signal. Okay, so that was 1, 2. So if the first trade doesn't work, let's utilize the second trade to clean it up, to clean up your P&L. This is done to smooth out equity curves. It's not done to maximize return. But for somebody trading manual discretionary during the day and you're quick scalping maybe on diamond setups, this can help you psychologically. So it's like your first trade lost a little or had a full stop out. Let's see if the next trade will get you back to 0 P&L plus. It's in a sense like resetting things. Okay, this trade was long. Price definitely moved far enough to get me to break even plus, and then I get a short trade. And this is pre-market, so yeah, pre-market isn't always clean. So it's like the perfect time to look at this kind of approach where you could use it. And so that trade made a little bit of money. Now I'm short, made a little bit of money. Now I'm long. So I didn't need to use the 1-2 method in here. Every trade was net positive in some capacity. Okay, now I'm short, so trade 1 had a partial loss, and trade 2 got me cleaned up on 2/3 of the position out. then I get a long, and the remainder comes out. So in a sense, I'm back. It's almost like I'm resetting to zero. I'm grabbing a little bit of chunks, trading during the worst period of the day. Well, now actually we're getting into the U.S. Session Open. So now I'm kind of back to reset. Trade 1 long, trade 2 short, partial loser, trade 2, 2/3 comes out at where I'm back between the first trade that was a loser, a partial loser, and the second trade that's now in the money. I'm to zero P&L, and then a third runs and makes me some. So it's something to understand, and there's some really good data on trading this way in an automated system for something like a prop firm account when you want to be very conscientious about your equity curve. In other words, you don't want your equity curve to look like this. You want your equity curve to look more like this as it's ascending, day to day, week to week, month to month. And if you're doing some automated trading, it's a way to flatten out or smooth out the equity curve. And on really big moves, on a 1-2, maybe the first trade was the loser. The second trade, when you get to roughly break even between the two and clean up what happened in the first trade, you still have a third on. And if there's a really big move, you're still going to make some good money on the trade. Now, if you have optimization that's screaming at you to go full clip, trade to trade, that's what you do. But again, you can modify this approach, but it's a concept to be aware of. And I never even knew about this, but it was shown to me when I was looking at ways of having trades in an FX portfolio account that were on average 4.2 days long, doing one thing in like a 12 instrument portfolio, but then the intraday stuff doing something that's more like this, but using the 1-2 method to smooth out the intraday trade activity that on average we were in trades on average like 0.68 of a day per trade. So it's just something to be aware of. Let me kind of explode the view a bit here. Let's get rid of all that. So let's just hit a few more examples. So there's trade 1. We had a winning trade there. Your system is running. You have a short stop somewhere, never any more than most recent price pivot. And then right here, you get a long signal. So first trade, let's say, just misses the threshold that if it trades to, your stop goes to break even plus, then that trade's automatically a neutral trade, meaning we're not considering it for 1-2 method because it's not going to lose anything. So we have a small loss from an entry here to here on 3 contracts. This one takes off, gets somewhere, 2 contracts come off. The net effect of the 2 trades so far is 0 P&L. So the loss has been negated. Now you have 1 contract on, and you hit a daily profit objective, or you're still running the trade, and now you're short. Okay, you're short, you make money. No 1-2 trade method there. Then you get long. Then that trade has pretty close to a full stop out. We'll call it a full stop out. So that's a 1, trade 1, trade 2 is short. Get in the money. 2 of the 3 contracts come off. The net effect of the 2 trades is a 0 P&L just in relation to the 2 trades. And then the next trade is long. So that last third comes out. So basically you had a bunch of trades and flipping back and forth, and you're these trades where there's a little bit of consolidation or a little bit of narrow range price action aren't killing you. You're coming out of them where your equity curve has some advances and then some partial, and then some advances, and then some partial, and then some advances, and maybe a little down. So your equity curve looks good. It's not like this, full loss, win, full loss, win. It smooths it out a bit. So then you're long. That one looks like it got to break even plus, so it's neutral. Then you're short, then you're long. Partial loss, now you're long. Okay, now you're taking off 2/3 of the position and leave 1/3 on. Now you could do the same thing if you trade in units of 2. The data we looked at, units of 3 works good. But you can do this with units of 2 and in effect make the equity curve as smooth as possible, because the smoother the equity curve is, and this just goes into system trading in general, I would rather trade an equity curve that looks like that with size than an equity curve that looks like this, with some areas where the ascension of the equity curve has some breaks to it. I might keep getting higher benchmark levels, but then I come back and have some whipsaw. That's nothing I want to trade size on. This one I can trade size on. So some concepts to think about when you're trading automated. Because on TradingView, if you have Claude AI connected, helping you optimize whatever directions and instruments you want to look at in time frames, and you're using the Traders Post tool, where do I talk about that? At the Prop Firm Scalping YouTube channel about 4 days ago, some info I give on Traders Post, and I should have a lot more detailed information going up here, and I'm going to shoot some videos myself on it. So yeah, keep watching. But Traders Post, there's one about 4 days ago. Automate your trades in TradingView webinar. I'm trying to get them to perform an interview or webinar for like anybody that wants to attend. So I'm still working on that, but they have the most weirdest, like your first line of contact with the entire company is all AI. AI here, AI there. It's like trying to get back and forth with the human has been a little bit slow, but we're getting there. Or we're getting the potential of a webinar here considered, and if I can get that done, we'll post up that information here in some sort of announcement video. And then you can optimize for the 1-2 approach, because a lot of times the 1-2 approach happens when you have signals that are very close together. You get a move, some momentum's building, it stalls, and then the counter move continues the original move. A little bit of kickback against the downtrend, nope, stalled out, and then follow through continuation. That's a lot of the times what's happening and why the 1-2 approach can help smooth out an equity curve, and definitely something to consider. So there you have it, the 1-2 trade method. And if you have any questions on the special offer that runs through Sunday from the Prop Firm Scalping group, contact them at info@propfirmscalping.com or go to the website, check it out. These are TradingView only tools, and I've had a little bit of discussions with the guys that run deep charts. Right now, they're not letting third-party tools going on. It is something they're considering. The guys at Prop Firm Scalping really want their tools on deep charts, but I'm like, I don't know if that's going to happen anytime soon, but we'll see. So there you have it. If you have any questions, let them know. And later today, a big video on AI, not only just for TradingView, but in general, and some very important resources you're going to want to track and pay attention to in the weeks and months ahead.